Good morning, everyone. My name is Fernn. I work for SE Ventures. I currently work for SE Nexus, one of the ventures. But today, the session is all about Mr. Jiten here and Ms. Michelle. So what's going to happen is we're going to have 45 minutes together. We're going to spend 30 minutes on panel discussion and 15 minutes on Q&A. Today, we're really going to talk about everything on SME, right? Title is the SME Growth Playbook for the Emerging Markets. And today, I am privileged to have esteemed panelist Mr. Jiten Arora. He is the venture lead for Solv and global head of SME platforms of SE Ventures. And we have here with next to me also Ms. Michelle Cheong. She is the head of content and business strategy of credit and risk solutions. Yeah, so I'm just going to quickly talk about what we're going to talk about. Today, we're really going to talk about this topic called the missing middle. I don't know what the missing middle is, Jiten, so you need to enlighten us. We'll talk about the challenges this target segment faces, and then we'll also talk about the latest solutions available. And lastly, we're going to talk about data. Data. How data can drive real commercial value. Okay, so we will run through 30 minutes of panel discussion, and if you have any questions, please hold them, and then we'll spend the last 15 minutes covering that topic. Okay? So with that, let's move over to Jiten. So Jiten, I have a question for you. Let's start with the problem statement, okay? You're the banking veteran, right? I'm not pointing out the white hairs you have here, but you're clearly very experienced in this field. What is the missing middle? What are we missing? What are we missing, Jiten? I have no idea. You want to tell us more?
Is that only my hand? We'll keep sharing this. So, thank you. Good morning. Good to be here. The second panel of Singapore FinTech Festival. Always a pleasure. And Fernn, thank you for pointing the white hair and not pointing to the no hair. Right? I'll take that as a compliment to start with. So let's talk about the missing middle. And it's an interesting phenomenon that actually has existed for a long time in all of the emerging markets. What do we call as the missing middle? Missing middle is where if you compare the emerging markets demographics of economic contribution from the corporates that operate as compared to those in the developed market, you will see a diversity in the way GDPs of the emerging markets are being built. In more developed markets, you do have a large continuum of corporate clients which start from small, medium to large and to multinationals. However, when you look at the emerging markets, you will find that there is actually a big contrast between large corporates that are growing and remaining large, and then very small businesses that remain very small for a very long time. And between them, they create a void in the middle, which is telling us that the small corporates are not really getting and are being under-leveraged to really power the GDPs by helping them grow into medium-sized companies and fill that void in the middle. So we have a continuum. That missing piece in the middle is a phenomena in the emerging markets. Now, it's not a challenge. The way we look at it, it's a huge opportunity. It's a huge opportunity because if we can unleash the power of these small businesses, help them grow, fill the void in the middle, they're going to contribute even more to the GDP of these emerging markets than they have done in the past. Now, I'd also like to just touch upon Fernn, while that's the missing middle, and I hope I've clarified what we mean by it. Why is it relevant? So it is relevant because the SMEs, micro SMEs, small businesses, whichever way you term them today, in emerging markets contribute anywhere between 30 to 60% of the GDP. Now that's a large number. They do contribute today to 30 to 60% of the GDP, right? They have brought in close to 60% of the workforce. So they employ 60% of the population of these emerging markets. But they remain to be underserved, right? Now, if these emerging markets, and let me take India as an example, if India's stated vision is a $5 trillion economy, there's no way that's going to happen from the 100, 150 large corporates that they have. That's only going to happen when they actually can fire up the small businesses to grow, lend to the economy, lend to the employment, and create that virtuous circle where they can actually get the economies to grow. So there's a huge opportunity sitting there. What are the challenges then? What are we dealing with? Why would they not grow? The reason they don't grow, and I think we went into this looking at the space as typical bankers, and as a typical banker, veteran or no veteran, we said, okay, the answer is very simple. It's because they don't have any access to financing. If we can open financing to them, that's the answer. Not true. When we actually went and spoke to these SMEs and did a lot of research, the first thing was, can you help me grow my business in a scalable fashion? Can you just help me connect so I can grow my business? Right? Today, I'm at the mercy of the only wholesaler or distributor that actually gives me the goods at his credit terms. I don't have access to the SKUs. I don't have a free marketplace where I can actually go and buy goods to sell. I am reliant. I'm not a trusted counterparty. When you help me grow my business, that's then the second order impact of access to financing will come into play because that's the fuel for my growth. But my first problem is trusted counterparty, right? So the financial inclusion that we all talk about of small businesses actually starts with the digital inclusion of these SMEs into the ecosystems. And that's what will help them grow, which has been a challenge for them so far. Now, don't hear it from me. I think we've got a few of our clients, a few of the SMEs telling you that's exactly how they feel. They feel imminent with their video and hopefully technology plays.
I am from B2B E-Commerce. We are a specialist supplier of agricultural commodities, mainly rice, edible oil, hardware, and we are based in So, talking about B2B E-Commerce, which has evolved over the last 5 to 6 years. So earlier we used to face a lot of problems with dealing while dealing with the kirana stores because they take very small supplies because they have very less space with them. Then they need very frequent supplies like every 2 days, every 3 days. So fulfilling the logistics was a major problem. Then they also needed credit support as well as we used to hire a lot of team for bill collection. So it was very inefficient to supply to them companies.
I am from Arora as Moderator and one of the challenges we have as small and medium business is lack of support for our customers who are not in a position to buy enough stock for their clients. So the supply chain product will go a long way in supporting my customers whom I can be able to supply, and it will solve the challenge of our capital. Over the years, I've had a big challenge getting money from the bank. And the money that I need from the bank is just for people to help me buy stock. If my clients are supported to purchase the stock for me, I believe we will be able to solve the challenge in business as well.
Hello, my name is Mavis of Abundance Grace Catering Services in Ghana. My business involves buying food and beverage items from wholesalers for retailing, both in my shop as well as to fulfill catering orders I receive for social events. Due to the nature of my business, I sometimes have to take some of my customer orders on a credit basis or with a very little deposit. Depending on how much stock of beverages and food items I have to meet the orders that come in, I sometimes have to seek help from microfinance institutions, banks, and some individuals for short-term loans that help me to meet my orders. The high interest rates of these loans and the uncertainty of the source of the loans are the biggest challenges my business faces. If I could have a more reliable and affordable loan source where I could borrow over a very short term, I would be able to take more customer orders and grow my business.
So that was quite a powerful video, right? Because I think when Jiten said that as typical bankers or from a bank's perspective, they usually think that, oh, what do customers need? They need financing. But this video has fleshed out a lot of other pain points, right? They talked about, I need to handle my suppliers, I need to handle my stocks, logistics, and I think she said something about trust. I need a trusted source of loan that is affordable and doesn't give me crazy interest rates, right? So I thought that was quite powerful. So before I move on to Michelle, because I am quite interested to find out exactly what your thoughts are on the video. Jiten, one more question for you, right? What are some numbers? You mentioned that they contribute 60% of the GDP. But besides that, right, what is this whole market opportunity that we're talking about if we can accurately serve the needs of the missing middle?
And you would ask me about that question because you're very commercially driven. So, as of now, the estimated need of financing to support the growth of the SMEs in these markets is roughly in the range of multiples of $1 billion in each of the emerging markets. In total, it adds up to $2.7 trillion in the emerging markets. Now that's a huge need, but that is also a huge opportunity. That's a huge opportunity for a lot of players to come together, whether it is corporate ventures like us to create that platform, to create that trust, to create that opportunity for them to become creditworthy, whether it is the credit scoring agencies, data providers, work that we do with the SMP, which I'm sure Michelle will talk about, as well as the fact that it also requires the financial institutions to start playing a big role in this opportunity. The issue has always been that trust plays two roles. One, trusted in the marketplace as a provider, but trusted also as a lender, right? I'll touch on the second one. The second one is because a lot of our credit scoring mechanisms that we've used have always been conventional rear view mirrors that look at the past performance of number of years, look at balance sheets, financial data. Any of these guys? They work on Excel sheets, right? That's how they're growing, right? They will not be able to provide that data. So to make them creditworthy, we've got to have a completely alternate new way of looking at credit modeling for these guys, right? And the way you do that is to actually go into their day-to-day business, look at their transaction volume, create a complete picture of their business more holistically, and then start lending to them. And you start using a plethora of alternate data that's available today, which conventional mechanisms will not be able to use. Sorry.
So thanks for that, right, Jiten? So I swear this is not staged, right? But Jiten has used some special words that I like. I like the hearing of alternate data, creditworthiness, and which then leads me to look at Michelle, right? Michelle. So what are your thoughts on the video, right? They were very earnest, right, in telling you the challenges that they face running from a business, and from S&P's perspective, what are your thoughts on the video, right? Do you agree? Access to credit, is it really a big problem?
I think if you just rewound ourselves maybe 5 to maybe 10 years ago, most of our clients and even the suppliers and customers that we try to score on a corporate basis are basically at least companies with financials. I mean, that's at least a baseline. And also in terms of the tools, and maybe I'll touch a little bit more about the workflow first, and then after that we'll go to the data and models. On the workflow basis, I think a lot of people were doing manual scoring. You load the financials into the model, you spread it yourself, and then you crank out a credit score, and then you use it for loan approvals and also the interest rates you charge. But the last, in my previous role, I was actually heading up data and API products for credit risk, and there was a definite acceleration in the change. Tying back to FinTech Festival, right? The change in how our customers are automating a lot of their processes. I'll start with workflow first, and we'll touch on data and also models. But on the workflow side, there's been a surge in demand. I wouldn't say you're suddenly having a 50% disruption. I think we're still at the early adopter stage, to be frank. But we're also looking at a lot more clients coming in to ask us for web services, API, REST API applications, feed, Snowflake, data cloud, the Databricks and all that. So it's a lot more automation end to end. Now, what that allows is essentially that you can, for all these SMEs, the loans are so small, you have to bring the costs down and also the speed up, because these are short-term loans, right, that they're looking at. And by automation, you can actually try to make it into an end-to-end automated process to start off with. I think that's at least the minimum baseline. And of course, when it comes to data, I think I'm totally in line with Jiten. I think that's definitely, I don't really take it in terms of let's just toss all the financials out the window, right? S&Ps is philosophically slightly different, is that we think about it in terms of basing updating. Now, if you have the financials, and if they are somewhat predictive of the future, which they usually are, use it. Why not? Why toss it out the window? The unstructured data, which is an interesting world we're going into, and which we also incorporate into our models as well, is basically a proxy of the estimated future state, assuming that we don't know it. Now, of course, that opens up. Of course, with big data technologies, that opens up an entire window. And post IHS merger, we haven't really cracked through everything that we had wanted to in the blue sky scenario. For example, if you look at, we actually have data later analyze, and we actually do collect even things like satellite images and imagery data, right? And it's been used by quant funds maybe even 5 years ago to look at investment returns by looking at satellite images. Now, and if we have that, and then now it's been used by our politics division to look at geopolitical issues, right? About whether looking at shipping routes, supply chains, and all this data is still data, right? You're still using some sort of data to forecast a future financial performance. And before I go more and more into that, I think it's interesting to look at it in terms of Bayesian updating, because for SMEs, for a long time, you won't be able to get financial information and audited financial statements. But you can start off with, okay, let me see if this SME is proxying a certain trend in the industry. Can we actually have a meaningful way of looking at the trend? For example, construction. Can you look at construction activity in a particular area, in a particular region, and use that to really understand how the supply chain linkages tie in with then the large, small, and SMEs and small and medium enterprises. So I think in the past, this was completely not feasible. Number one, data ingestion is gonna take years, right? Even just the data collection, ingestion, processing, the costs are prohibitive and the margins are so low, it's hard to start any work and make a business case. But now all this is actually possible, which opens definitely that way of updating our beliefs. Yeah.
Okay, so that's quite interesting, right? Because I think we've slowly moved on from the problem statement, and then now we're starting to touch on the various solutions that we're seeing. So of course, this week is Singapore FinTech Festival. It would be remiss of me not to talk about fintech technology solutions that we see. So maybe Michelle, my question to you is: you've seen so many, you've given us so many examples. Maybe share one of your favorite ones. Any new solution or technologies that you're seeing right now that you do think will, make a significant change for the SMEs?
I think for myself, it's getting a better power of proxying missing financials. Because you're still trying to get at what exactly is the state of nature, or what is the earnings going up. If you look at SMEs, you have a certain cut-off, right? Maybe 10 million revenues and so forth. But if you look at models, it doesn't mean that suddenly up at this above cut-off point, your financials are usable, and below that cut-off point, you should just toss out the financials. I think one of my learning curve really, from going from a pure quant person into a person working with commercial bank vendors, is that really think about the mindset change. In the past, you almost have two different schools of thought. School of thought A, classical financials, use all your ratings criteria and score your models, which a number of you are probably familiar with. Then you have school of thought B. Okay, financials are completely not useful. Let's just toss it away and let me just run whatever I can with this, right? Or maybe have cash as a buffer and all that. I think right now the biggest change is how do we actually have a hybrid, right? And that hybrid mentality, I think, is going to help drive forward because it's the whole philosophy is can you maximize the information you have available? Again, even industry proxies, right, are quite important because if you look at even a supply chain of goods and services, the broad sector trends of that goods and services actually does trickle down into the SMEs. In fact, if you look at any sort of a stress test scenarios, those scored at single B minus and below, which is most of the SMEs would be. If you scored it on the scoring model before that, they would be the first to default. In fact, they would lead the default cycle and the spike up. So I think having that hybrid mentality, I think will help a lot in just bringing the two together.
So maybe I'll just push it a bit further. So how does this hybrid look like, right? How do you use the two different schools of thoughts to build this new model that you're talking about?
Sure. Okay. So the way our modeling approach is that first of all we start off with SMEs. It's very difficult to start to build a model from scratch, right? Because you're dealing with noisy data, right? If you try to run an NLP through noisy data and allow it to settle in maybe 5 to 10 years, the model is still not trained properly, right? Because of your modeling noise. You're modeling misleading data, you're modeling data which is not apples to apples comparisons with each other. It's very difficult to get the structure correct. So we start off with large corporates, we bring it down to medium corporates and small SMEs, medium corporates about maybe 10 million USD and below, and try to use that structure, see how much of that applies, and see what components apply. I mean, the basic thing is if your cash flows can't pay your expenses, probably can't pay your interest payments, probably it's not going to pay your debt, right? And then from there, then you extrapolate and over to, okay, now can we actually use unstructured data? It could be payment data, it could be social media. I think a lot of these social media textual data, and use that as we think of it almost like an overlay or basically looking at adjusting model weights for two different schools of thought. And then also the credit cycle adjustment. I think the credit cycle adjustment is quite an interesting thing to look at, mainly because I think when we were walking around to our regions for different clients, when they try to adapt the classical models of credit risk and benchmarking, they forget that when you go further down, the smaller you go, the higher, the more buffer you actually need to weather so-called storms and downturns. So I think the adjustment for industry and market factors are actually interesting things to look at as well. Okay, I'm going to pause here.
No.
So I my passion topic, so I tend to go on.
I love working with passionate people, because that means that next time you give us 1 hour, 2 hours, one day, right? So what I hear is you talked about, in terms of the latest trends, we are exploring alternative data, right? You talked about social media data. You also talked about AI and ML. Right, application of AI ML onto the data that you have so that you're able to do new ways of forecasting. So we've talked about data piece. So Jiten, maybe over to you. We've talked about data piece. Let's talk about business models, right? I think earlier at the start we talked about digital inclusion. What are your thoughts, or what are you seeing right now? What are the latest trends or technologies that you're seeing right now in this whole space?
Thank you, Fernn. So I'll try and concentrate more around business models and not just technology trends, because technology is an enabler for those business models to exist. And the issue we faced in the past in not being able to address the needs of this underserved, underleveraged segment of micro SMEs is the business model. Because the current business model, and very frankly, we tried it, all right? Alex, myself, Joe sitting in the audience, have all been part of this journey where we try to call banking the ecosystem, where we try to actually get supply chains onto financial inclusion, get down to the real lower end of the supply chains, and found that it's actually going to be very difficult in the current business models of the banks because the risk reward do not stack up. The cost of acquisition does not stack up. The cost of servicing does not stack up. It was not a fallacy of the opportunity, it was a fallacy of the business model. And hence, I'll concentrate on what does the new business models that address this need look like, right? The first and foremost is that there are now 2 or 3 big enablers. The first big enabler is actually COVID. In a way, I know it sends shivers down our throats, but actually it has led to a huge amount of receptivity towards digitization, right? And because of those 2 years of hiatus, a lot of businesses have moved to being more digitally savvy, which is a big enabler because you need to be digital to be able to grow this at scale. Second, regulators have actually figured out that they will have to grow these micro SMEs. So right from India to Ghana, and we were having a fintech festival of Ghana last week, Dr. Maxwell talked about the use of data and creating credit scoring for micro SMEs. Right? So that is a rampant trend now across. So those 2 are big enablers. Behind that, the business trends that start to follow is one, you got to get into places where you're now able to connect buyers, sellers, the entire ecosystem on digital platforms, taking away manual way of doing KYC, CDD, manual way of getting people to interact with each other and moving it all to a platform so that you can actually start collecting the transactional data that moves in that flow, right? That transactional data is going to be really important for the next steps of the journey. By getting them into a digital marketplace and letting them transact in a seamless manner, opening up the horizon for them in terms of buyers and suppliers, the SKUs that they can go after, and giving them a power of leverage is only possible through a digital marketplace model. That's one trend that we're starting to see. The second trend from an e-commerce point of view, which is actually helping a lot of the SMEs, is this Uberization of logistics. Logistics was a big issue, and you must have heard a couple of the SMEs talk about it, that for them to really get access to those goods, even if they place an order for the good to get to them, it has to be milk runs, small milk runs, because their buying pattern is small. But the new innovation of 3PL players that have brought this new ways of logistics where you can actually do milk runs in an efficient manner is a big enabler and a big trend, right? The third trend, and I know you didn't want me to touch upon this, but I'll still touch upon this, is the entire way of credit scoring. And so we focus a lot in terms of how do we score these SMEs and micro SMEs and make them credit worthy. It is not about tossing out the financial data, but it is all about how do we create that financial data for them. So how do we look at their bank statements? How do we look at the device data to construct their bank statements? How do we look at their GST, income tax returns, alternate source of data through telecom usage, device data, Google ratings, social media data, psychometric data, to create a complete 360-degree comprehensive view of the data of today, not tomorrow, right? That's important because that's going to help them get access to credit and be credit worthy and be a trusted counterparty on any platform, right? So that's the third big trend that we're starting to see. The fourth trend that we're starting to see is you have to move away from these big business solutions that actually come in for the multinationals and break them down to really component-sized solutions. And so business services like ERPs finely tuned to the micro SMEs, taxation services finely tuned to the micro SMEs, are all a next trend. So there are trends which are starting to see micro SMEs as a huge opportunity. Bring them onto one platform to be a platform of growth for micro SMEs is important because SMEs don't have the time to go and access them in disparate fashion, which is where we've set up platforms like Solv, which are able to bring all of these together for the micro SMEs in one place so that it's very efficient for them. The last trend, and it's not a trend, it's an understanding that all of us need to get into, is unlike the large corporates, multinationals, where they have large teams and they can actually keep their business on one track and their banking engagement on the other track and their logistics engagement on the third track, their supply chain on the fourth track, that's not how it works with micro SMEs. They're small, right? So embedding everything into their day-to-day business is important. So they don't have to really step out of, what they should know is that they're doing their business and the rest of the services are getting embedded into their day-to-day business. That's the only way to work, which is why this new term of embedded financing, right? which is predominantly embedding financing into their day-to-day operation. Don't let them step out and have to do something which is going to be different from them doing their day-to-day core business.
So I think it's spot on, right, Jiten? I think, essentially, in banking, we always say we do KYC, and it's exactly what you're doing, right? You're talking about know your customer, but in this case, I'm going to know my customer in this segment, the SMME segment and the SME segment, correct? So I'm running out of time, and I know some of you've registered for this panel, right? Because you came for a playbook. You're here to ask. Excuse me, I came here for a playbook. What is that playbook, right? So, Jiten, you've covered 4 to 5 trends. Michelle, you've talked about new ways of ingesting different sources of data. Let's give the people what they want, right? If they're here to ask for top tips, right? Any top tips that you want to share for anyone who's interested to help better address the challenges the missing middle faces? Any top tips, any non-negotiables, or any stories to share? I love stories, right? Any stories that you've learned from your own internal experiments that you have learned, you have failed, and now you want to share with them, right? What would you put in this SME playbook for anybody who wants to attack the emerging markets?
I think, coming from a previous role, which is more of a data geek, I think a lot of time people think, if there was one thing I've noticed, it's to think about data not as whether data exists or data doesn't exist. It's very, very binary way of looking at things. But really, does that data work for a particular use case? And if not, how can you formulate that data so that it works for your use case? So the data is shift in mindset whether it's there or not. But think of it as what do you want it to do, right? So let's say that the SME inherently is not clean data. It's the same way as if those who, for some of one of data sets I've worked with, they were derived for a completely different use case than what I plan to actually use it in product. But you have to make do because you built it 5 to 10 years ago. This is what you have, but it's the raw materials you have that you are using. Now, how can you then repurpose the data, imperfect as it is, flag those so-called, similar to the philosophy of KYC, flag those which are bad actors, right? For example, accounting is financial statements are bad. Is there a way to say which ones are the ones which are closer to the median of the small industry, and which ones are really going into the red zone, and which ones could be, reported in a fraudulent way to get around and try to get a higher credit score than they deserve. So, in 2 states of nature, we're trying to, instead of pooling, separate the good and bad actors. So when you think about it that way, it becomes more like a Lego piece or piece of a clay which you mold into your use case rather than data is here, data is not there. I think that's one thing I learned over the past few years working with data. Yeah.
Okay, so clean data, right, is one thing.
You don't need data to be clean or perfect to use it. So it's tailoring it, but it also requires you to understand the limitations pretty well. It's not that, okay, now I collected this whole bunch of data from a provider, from an aggregator that we just plow it in. It's really to go all the way back to how it's being collected and where are the gaps. And really think about that at that level first before you even start to think of the models.
So Jiten, how about you, right? Because you talked about embedded finance, you're talking about, put them inside a marketplace so that there's one-stop shop that solves all their needs, right? Any tips, right, for anyone who's interested to do this?
Tips are difficult to give, we are all learning.
Yeah.
Right?
It's okay, so we position it as any lessons learned, right? Any mistakes made, any lessons learned. I assume that anything that is shared here stays here, right? So we're in a safe space, very safe space, right? No tweeting, no social media stuff here. I'm joking. So any lessons learned?
I completely believe you. We're in a complete safe space here. Sure. We've learned a lot of lessons, and we're learning, right? As I said, our first lesson learned was providing financing is going to solve the need for the SMEs, right? It's wrong. The second lesson that we learned was that micro SMEs work like mid corporates and large corporates. No, they don't. Right? The third we found was that if we provide them solutions that we think can actually give them access to a few things, it'll start helping them know you've got to have a holistic solution together for them. Just one is not going to solve it. You got to look at the needs on a more holistic basis. On those learnings, I think where we are as of now, and I know we're running out of time and we do want the audience questions, so I'll tell you 4 quick things. One, go completely digital. This is all about scale. You're talking about a huge number of micro SMEs, a huge amount of transactional flow. Any manual step is going to be a killer of the opportunity. So go scale, go digital. That's one. Second, embed yourself into the day-to-day business, because as soon as you ask them to step out of the day-to-day business, you've lost the flow, right? Because they don't have that time. Right? They're busy trying to make early. So get embedded into their business. That's the second important. Third, data is the new oil. And the reason I say that, not from buzzwords, is because I like the financial data. It is a good revenue data, but real transactional data is more important to assess the willingness to pay and the ability to pay than a back-ended data or a revenue data. So data is the new oil. Focus on collecting, digesting, understanding the data and building tools around that data. And last, keep it absolutely simple.
Okay, we actually have time, right? Yes, Alex.
I'm reflecting on something Michelle said, which is the data doesn't have to be clean in order to use it. I'm guessing, and would love your perspective on this, both of you actually. Wouldn't you want it to be dynamic rather than clean, ahead of clean? Right?
I think it's both. Dynamic data helps in the sense that you can quickly update your release as to what the state of nature is. So if there's obviously, let's say if you have latest trade payment data, or even some sort of revenue or same store sales data, or some sort of data that estimates the health of business, definitely apply it sooner than later. Is to rethink it as basing updating. My previous update is up to here, right? This is the score. New data revenue came in. Is this a one-off blip, or is this a sign of a broader industry trend? The sooner you detect it, the sooner you update your forecast of what it is. I think that's, even if you look at anything logistics, even if you look at spatial data, the amount of construction activity in an area, right, would tell you what that overall aerial real estate development across the entire supply chain would look like. So I think that's, for myself, it's more about early warning and when you should really start to intervene and really cast a doubt, or really about building a larger confidence interval around your baseline forecast.
Yeah, I'll just add to that, Alex. I think what we've seen is that dynamic data is actually now starting to get even more pertinent in terms of what we're trying to do. So if you want to go and look at the performance of a micro SME in the last 6 to 9 months, the bank statement is not going to give you the answer, right? What will give you that answer is what's been their sales throughput, how much have they bought, when did they buy, how much did they sell, what's their working capital cycle looking like, what's their track record of payments. They do a cycle every 15 days. The micro SMEs don't store something for 3 months. Their inventory is 15 days. So you're getting every 15 days, you're getting a marker on the performance of the micro SME. And that dynamic data is going to be really, really essential when you start building the credit scoring for those micro SMEs and getting them to be credit worthy. So it's every 15-day turn that's giving you a new signal which you would not have in unstructured or conventional data.
Okay, we've got a question there.
Yeah, this is the gist of I'm Janet Thomas. I work for Standard Chartered Bank. I'm in partnerships, so I get the opportunity to work across the whole globe and see what's going on both at grassroots.
You probably might want to use it.
Thanks. Hello, I'm Janet Thomas, and I work in partnerships for CCIB. I'm based in DCDA. I get the opportunity to work across the globe and see what's happening on the ground and from a strategic level, particularly SME space. And basically a question to Jiten. I was just wondering, during the pandemic, before we got to the stage of that fast level of adoption for digital, do you think there was a stage before that? And I ask that because I have 3 examples in my head where in Nigeria, in order to get small retail owners, mostly women, to continue their trade, there had to be folks on the ground who helped them to understand and learn the advantages of digital. Then in Ghana, what we saw in Ghana was that the government actually hired digital or fintechs to help the cocoa farmers and train them to use digital capabilities. And then in another country, Indonesia, we saw that there was an absence of government support, and so the farmers were unable to use, commodity farmers unable to use digital. I can't say for sure whether those interventions help with the adoption of digital, but because I only have 3 examples, but you've seen much more than I have. Do you think there's a stage before the adoption of digital?
So there is no doubt that the last 2 to 3 years of the pandemic has really helped amp up the digital receptivity in terms of people wanting to use digital, right? But even before that, the question really in my mind is, I'm talking about now coming back to that embedded, right? If you give any of these micro SMEs, farmers, tools that will help them do their business and what they see to be their business online, there is acceptability to do that. However, if you're giving them a tool and saying, you got to do your business in your shop here, but now when you want to go and get financing, you have to fill 10,000 different forms, go into a different channel, apply for it, that is difficult for them. Because that's taking that precious time away from their day-to-day business into trying to solve for a problem that they know is limiting, but not as precious as their day-to-day business, right? So as long as you can start getting their business to be the main driving force for digital adoption, and then you embed things behind that, that is easier from a receptivity point of view than keeping it distinct. That's one. The second thing is the data existed even before this, really. So when we do supply chains, and I'll take the example of Kenya and Ghana, when we do supply chains for a BAT or a Diageo, they've been existing. These ecosystems with their retailers have been existing, right? What we've never linked to is, what is the data behind them? So if you go to BAT and it opens up its sales ledgers, right? You should be able to digest those sales ledgers. From those sales ledgers, you should be able to see this retailer has been selling BAT products for the last 3 years, has paid on track every time, and this is his volume, this is his monthly cycle. That data existed. We're now starting to put a different technology to be able to digest that data, form patterns, and leverage that data. I hope I've answered the question.
Yeah, thank you.
Any other questions? No questions? Okay, then I have, so I'll close the session. I'll do it a bit differently. I'm not going to put you on the spot, okay? So we'll start with the ladies first, yeah? So Michelle, give me one word to summarize your thoughts in this space, and one word that would describe what you're looking forward to in 2022. It can be personal, doesn't have to be work related, and you cannot use the word data.
I really hope to see a mindset shift. I think it started during the pandemic. I've been trying to look at, when you talk about disruption and change, definitely I'm seeing a lot more people opening up to a change in the way they work, so that it's no longer just there's there used to be one silo working on fintech and new stuff, and then there's a traditional, BAU folks working on everything else, which is the core business. I think in 2022, going into 2023, we are beginning to see the technologies go a lot more mainstream in the organization, and I think that is going to be very exciting. You know what, we can talk about businesses disruption and all that, but I think it's a lot of it on a day-to-day basis is basically stakeholder buy-in. That's what's going to move things in the end of the day. And I think this and coming next year, it would be, I think I'm really looking forward to that shift in mindset and more of the broader organization buying into the new ways of doing things.
So, on the theme of playbook for micro SMEs, my views are one, a lot more confident that we can create an impact for the micro SMEs, which is commercially viable and financially sustainable. Right? That's one. Looking forward, scale. We've got to scale this really quickly to create that impact for millions of micro SMEs who are out there with a passion that they want to grow their business and contribute to the economies.
All right.
I was going to set you up, Jiten, for parting words. So we got Solv. It's a beautiful thing. Serves a bunch of SMEs in India. We just launched it in Kenya. We will launch it shortly in another African market and another Southeast Asian market. Stay tuned. What else do you have in mind?
So Solv certainly is
Preview.
it is absolutely the front runner in terms of creating that impact I just spoke about and being a real differentiator for the micro SMEs, helping them grow their business and being a partner for growth. And we want to stay with being partner for growth for them. Across multiple markets and emerging markets, they will take them. The second piece, the second thing which excites is, with that what we're learning is the power of being able to create Solv score. The entire credit scoring, which will actually become a benchmark for micro SMEs in emerging markets, and that's our aim. And we've got great partnership going with SME in defining that for China, for example. So, a score that is more nuanced and ready for micro SMEs is the second. The third that we're doing is, we're not stopping with just micro SMEs and corporates. We're also taking it down to actually bringing a social impact and inclusion to farmers. So AgriTech, one of our new ventures in Kenya, is also very key to our heart because now we're able to take the entire continuum of the ecosystem from the large corporates, medium corporates, but actually to where it is done, which is farm gate banking. And that's our another exciting space. So I would say between them, we would have covered quite a bit, but there's a lot more to do.
And this is why you come in early, because in this safe room you get early dips, right? We're going to enter a new market, we have a Solv score, and we're going to do farmers inclusion. Yeah, so you guys have it first, you guys heard it first. You can go ahead and tweet it all you want. So with this note, I just want to say thank you so much to everyone for spending a precious 45 minutes together with us. Please join me to thank Jiten and Michelle from SME.